We are now going to be focusing on embedded finance solutions and how technology is accelerating their impact. How do changes in consumer behaviour interplay with innovation, and what other forces are reshaping industry dynamics, and what is needed to unleash growth? Please welcome our moderator, Liz Lumley, and her panel.
Everyone, I hope you had a really good day. Welcome to the panel. In the interest of time, as I'm sure you're very used to these quick-fire lightning rounds, we are not going to introduce anyone because you can consult the screen. But we'll have a very good discussion otherwise. So, of course, we're going to be talking about embedded payments, embedded finance, which has been a huge topic for years and years and years in the fintech space. I think whenever we talk about this, and with anything in fintech, the first question is the customer. So I'm going to start, Ian, I'm going to start with you. Obviously it's the customers are demanding something, and the people promoting embedded finance are saying, well, we're going to deliver. Is there a balance? Is there a disconnect? What are customers actually looking for? And is right now what embedded finance is offering, is it delivering?
That's a big question. I think, and when we talk about customers, I'm talking about end users here, rather than my customers, probably.
You did say you were going to answer however you wanted to answer.
Exactly. So I think from an end user perspective, it's always, easy, immediate, high degree of choice, some trust in there, I think are the key things that we have to deliver. And often I think the mistake is to go, here's a load of new shiny things that we want to add in, let's add them in, without thinking about how we actually fulfill that easy choice, simple to use to the end user. And I think that's super important that we focus on that.
So Ciaran, what are your views and what customers are looking for, and are they actually getting it?
Sure. So I've actually had quite a unique experience recently. So I moved from open banking into embedded finance about 2 months ago, working with Airwallex, and I spent the last couple of months just talking to the customers. So customers are typically marketplaces, they're SME lenders, a broad range of financial institutions. And they spend so much time obsessing over their own customer experiences, whether that's the UX, the support, all these things. And then they hand over to a bank that they have no control over. So some of those banks have phenomenally good experiences, some of them less so. Some allow international payments, some don't. And they just don't have control. So embedded finance really brings that control back to these marketplaces. To make it concrete, imagine you're selling cars, you've got your onboarding dealerships, and the most important moment for those dealerships is when the money gets transferred. Embedded finance allows them to actually control that in the marketplace. So it gives them control, it gives them that customer focus, and I think it's brilliant, right? It's what the promise of embedded finance is, and it's starting to come to life.
I think, moving on when talking about customers, whenever, I think the most interesting fintech conversation is talking about SMEs and small to medium-sized businesses, and how I'm sure my grandchildren will moderate a panel claiming that SMEs are now taken care of by the financial services industry, but it will happen someday. I'm just looking at how embedded finance is supporting that market. And so, Luuk, I wanted to start with you.
Yeah, thank you. I think in general, I think everyone is aware that SMEs struggle to get the financing that they need to run their business, to grow their business. We all know about the funding gap that is out there. And I think that's where embedded finance can actually change that. So embedded finance can help businesses who have poor credit or limited data on them, and actually to help approve these businesses, right? So embedded finance helps YouLend to improve the financing processes to deliver up to as high as 90% approval rates. And I think SMEs in general, they don't want to go to the bank anymore to get financing. They want to take financing from the platforms that are using it every day into their software, maybe into the payments. And I think that's where embedded finance can really make a difference for businesses. It helps them, basically increasing the chances of being more successful by getting that financing, right? To invest it, to see in opportunities, and helping them grow.
I want to continue this SME conversation, so I'll go to Andrew now. You know, what are you seeing?
So I think it's definitely fair to say that SMEs have been underserved for a long time in the market. And I think if you go back, where are we, 6, 7, 8 years now, to when the BCR kicked off, the whole purpose of that was to make sure that actually we could genuinely stimulate some competition within the UK SME space. 20% of UK SMEs as a result of that are now banking with somebody that came through that process, someone like ourselves that fundamentally supports Tide in the back end. What we're starting to see is that businesses are now being able to actually spend more time running their business, less time having to focus on the sort of the administrative side and chasing up payments, much more integration, but it's the combination of the sort of the back-end infrastructure that's specifically there to serve those customers with the right partnership on the front end of it that really is the sort of the secret sauce behind embedded for sort of finance, embedded banking, embedded payments, whichever way you want to go. But actually, it's really broadening the appeal and the opportunities for SMEs to sort of partner with.
Sounds very, very hopeful. So, Yvonne, what are you seeing?
I mean, without echoing, repeating anything that's already been said, I think there's significant productivity gains. I mean, if you think about any startup, and SMEs, they have been very underserved, right? And so what it means is that they now can, in their existing platforms that they already use, access finance, which they probably wouldn't have easily access prior to that. And so with those efficiency gains, on the other side of things, for the businesses that are actually serving them, it does actually increase that stickiness because they're provided a much better service that otherwise wouldn't have been provided. So for example, we're invested in a construction tech company, for example, and they're able to extend the marketplace services of procuring the materials to providing, access to finance. And it provides a very seamless experience. So huge productivity gains, but on the other side of it, increasing stickiness, better, product experience. So a win for both parties.
So, Luuk, I was intrigued by something that you mentioned during our prep call. And, if you look at sort of a really broad definition of embedded finance, it's bringing sort of a regulated financial service into a non-financial industry or company or organization. And you made this point about the way customers expect service and experience from other digital experiences in our life, and then the type of customer experience that a lot of us experience in financial services for various reasons. How is that clash managed, and can it be managed?
Yeah, I think if you look at an average or an SME business, right? Like there's always an owner or multiple owners, but in essence, we're all consumers, and we're used to the UX, to the convenience of using platforms, whether it's Uber or kind of where you're ordering online on Just Eat. And I think that translates also into the demands, what you want as a business, right? Like, so you would like to get the financing at the right point, at the right time, at the right place, and you want to get it easy in a few clicks. And I think that ultimately drips down to how SMEs interact with lending. And I think there's a big opportunity for platforms to play into that, because it ultimately, you increase the value towards your customers, that increases stickiness, new ways of monetization. So it's been, I think, a very win-win situation for both sides.
So there is no friction then, if it's win-win.
Well, I think a little bit of friction is always good, right? But I think it's limited friction, right? Like, and especially if you compare that to maybe the traditional processes, going to a bank, the lengthy processes, a lot of paperwork, right? Like that can be removed. And it's been great kind of to see how that helps businesses grow.
I've been seeing a lot of nodding. Andrew, you've been nodding a lot. Would you like to comment?
So I think it is, removing friction is critical to all user experiences. And I think, I would agree. I think a little bit of friction is the right friction is good in this process. We mustn't lose sight of the fact that actually the compliance aspects that underpin embedded finance is absolutely critical to the success of how it operates. So I think removing stickiness, removing friction is critical. Particularly if we go back to the SME space, it's about actually focusing in on the underlying service. It's not the frustration of, can I get my financial product? I fully support that. I think it's just about getting that right balance. And ultimately, that's where the regulated entity that sort of forms part of that journey is so critical, is actually instilling the right standards to make sure that it is a successful proposition. It's able to be deployed in the right way, but ultimately that the consumer or the end user has got the right protection because they're dealing with somebody that they can trust through that regulation.
Ciaran, do you have views?
Yeah, so from my perspective, that onboarding and compliance aspects you mentioned is critical, right? Embedded finance effectively allows businesses that aren't financial to access all the benefits of being a financial services company. Now that means that the embedded finance providers need to be able to offer really effective onboarding and understand the customers. And this is where things like, and I know it's somewhat cliche today, but this is where AI and similar solutions really help, because you can understand the businesses that are being brought in to offer financial services, and you can get them served in a really efficient, effective way, and perhaps make sure that those who are, bad actors, shouldn't be onboarded, can be sifted out without creating a terrible experience for everyone else. So, going back to this point on SMEs, right? They have so many important things to do with their time. Every hour spent working on applying for finance or applying for something is an hour spent not doing what they're really good at. And so that's where embedded finance is magical, right? It's where it can deliver improvements throughout the economy.
Interesting. How many founders are product people or finance people? It's interesting to see that. Yvonne, what do you think?
I think absolutely. And on your point of AI, I think that, there's real great opportunities now to provide like advanced analytics and to also provide more personalization and ensure that, these businesses are better served. And so I think that, friction is good, but I think there's always improvements that can be made from the way in which it's delivered.
So when talking about embedded finance, though, we are talking about collaboration. We're talking about partnerships. What are some of the strategies around finding the right partner, finding the right collaboration? Luuk, what do you think?
Yeah, I think in general, they're ultimately interacting or serving your customers, right? So you want to have a partner that is reliable, that has a proven track record, having done it before, maybe through various macroeconomic cycles. So I think that's key. Sharing a focus on customer value, I think that's critical. And I think sometimes it's also important that maybe a partner has a turnkey solution available. There's a lot of solutions out there with a lot of opportunities and growth stories, right? But everything often it requires integration, etc. So a partner that can deliver with a turnkey solution to test it, get some real live data in there, I think that's a helpful piece also.
Yeah, Andrew, you mentioned, relationship with Tide, for example, and how important are some of the procedures around finding the best partner?
So I think at ClearBank, we spend a lot of time with prospective partners assessing what we consider to be the cultural fit. So do they have the right, the right operating models, the right frameworks, the right ethos to actually work with us? At the end of the day, the regulator is going to look at us for our banking license. So anybody that opens an embedded banking account through one of our partners is ultimately being served by ClearBank. So it's critical to us that we've done the right due diligence, we have the right ways of working, that we can support each other through those things when things are good and when things go wrong. And ultimately, you are only as strong as the weakest link in that chain, whether that's a due diligence and an onboarding process, whether that's actually the UX that's being provided or indeed, access to a payment rail. So actually that cultural fit is really, really critical. And we spend a lot of time actually making sure that those partners are really the right partners for our brand and our proposition.
So Ian, I just realized I've been neglecting you. And I know that we were talking a little bit about, partnerships and acquisitions and collaborations, and I know that you're snug in the bosom of Visa. So what is it? What are some of the procedures you're seeing?
Sorry, I can't hear you on the mic. Say again.
What are some of your views around finding the best collaborators?
I think, I'm not going to touch on the visa piece. We had a long conversation about that earlier. So I think that, I started off at the beginning is it's got to be simple and easy, and I'm a very simple human being. And if I look at the partnerships that we have that have been super successful, and maybe pick out, a couple of the things that are adjacent to this. So if you look at simple stuff like online accounting platforms. So transformation initially from something that you had to have on a floppy disk for Sage way back when to something that you just access online. Well, what's an improvement on that? Well, let's pull the transactions into the account. Let's reconcile all the income and expenditure against our invoices straight away. Now, you talk about SMBs and the time it takes to go and get financial services, to get funding, but ultimately the simplest way to get funding is to get paid as efficiently as possible. What's one of the biggest problems when you're a small trader or SMB is getting paid. So if you can get a really clear view of your finances, great. And then, on to the next one. How do you then get paid? Can we push out a payment flow that makes it nice and easy? You don't have to think about it. And I think the best partnerships for us is when we're talking about something that has a benefit all the way through the chain. So not just the customer that we're engaging with, but ultimately their customers as well. I think that's where you see the real return.
Interesting. I've been freelance for several significant portions of my journalistic career, and I have a list of all my favorite why we wouldn't pay on time excuses.
I generally am the one at home who gets in trouble for not paying for the kids dancing or whatever.
Our accountant is in Bali. That was one of them. Yeah. So I want to talk a little bit about technology aiding growth. I mean, this is ultimately made possible by digital technology. Like, what tech is the most beneficial? So, Ciaran, I'll start with you.
Yeah, really interesting area. I mean, the way I look at the kind of embedded finance world is that you've got all of these regulatory capabilities, these licenses, these banking facilities across the world, and embedded finance takes all of that complexity and then makes it simple. So, of course, the most important one of all is the turning all of these things into a simple API. Then you have building, reporting, and building all the types of dashboards that drive platforms to be able to monetize and work with their customers. And then on top of that now, with all the data that's produced, like Airwallex, I mean, we spend so much time talking about what can we do with our data and how can we drive better customer outcomes. And of course, AI, I'll say it and I'll keep talking about AI, it gives us such a great opportunity to take that data, not just use it ourselves, but allow our customers, so platforms, to improve their proposition. Because everyone is trying to grow their customer lifetime value. And they do that by providing better services, and technology is the ultimate way to do that. So, yeah, it's been a real experience. As I mentioned before, recently moved across to Airwallex, and the focus on how do we build better technology solutions using all of these regulatory capabilities. It's very exciting.
So I'm gonna turn to Yvonne to ask you about technology, but just a follow-up question about, you've mentioned AI twice and how this is beneficial. How exactly?
Yeah, great question. Okay, I love double-clicking on these things. So let's say, for example, a customer wants to onboard. So there's a platform, an accountancy platform, and they gather data on that small business and pass it through to someone like ourselves. Now, if there's an easy match on the details on government databases, etc., that just flies straight through. But what if one of the names is slightly wrong? What if there's something which a human would look at and say, that's fine because of X, Y, Z? Currently, we can't do a rules-based approach to that. The AI allows us to train based on those decisions and say, okay, actually, this should be straight through, immediately processed, which, to all the points that have been raised, it's all about giving the customers what they want when they want it. They don't want to have to resubmit their passport because our system can't quite spot it. And that's the simple case. You've got all of the data analytics on top of that and being able to pull out patterns and customer behavior that isn't linear and easy. So it's pretty limitless. I mean, fraud analytics, fraud prevention, I could talk for hours. So yeah, but it's really important to go into the detail on this.
Yeah, Yvonne, you were nodding along to a lot of that.
Yeah, I think also share your excitement when it comes to AI. I mean, we've seen such a huge unlock when it comes to the lending companies within our portfolio, and just the ways in which they're really creating tools and serving their customers better. Totally agree with you when it comes to the rules-based approach and the fact that, customers on that onboarding phase know, hopefully it reduces the risk in them not being able to access the service, right? Because up until now, it's too high risk. Most lenders will just say, we're not taking it on. But now, having this rule-based approach enables better delivery. And then, aside from that, the ability to actually monitor customers' behavior a lot more accurately and have a clearer picture on the underwriting risk, I think is also a really big unlock when it comes to AI. So that's something we're really excited about, and I think it just creates more room for growth from that perspective.
So moving on from fun technology, we're going to talk about regulations now. And the word of 2025 in the UK is growth and scalability. Looking at regulations, how can they be dealt with to enable that scaling? So Andrew, I was going to go to you.
So I think actually we've been reasonably fortunate over the last 10 years that the UK's had quite a strong competition mandate from a regulatory perspective, which I think has fueled an awful lot of innovation, it's fueled a lot of new business models, and it's fueled a lot of that growth that's coming through. I think what we've got to make sure is that we always balance that regulatory piece with the growth and make sure that we're on the right side of that. And I think actually a good example, just going back to technology for 2 seconds, is you talk about rightly the AI benefits and the data benefits. Well, actually one of the really key things from a regulatory perspective is the resilience. How is it through something like, let's take Microsoft Azure for example, that actually you've got that ability to be able to continue to provide services even when something goes wrong. And I think that the criticality is that actually we balance the innovation, we balance the experience for the front end, also with that resilience and that stability in the back end. And that really, for me, is the key of where the right level of regulation is critical to allowing us to actually be able to provide scalable solutions that actually consumers and businesses can trust all the way through. And trust, I think, is the biggest word for embedded anything, embedded finance, embedded banking. And I think all of those components come together under that trust banner.
So that right level of regulation, anyone want to jump in with a comment on what that level is, Ian?
I mean, I would say that I think the important thing is that there's industry engagement that builds up to the regulation. So often we see, particularly around the open banking stuff, that we needed the regulation to just push it over the line. But actually now there's a lot of driver comes from industry into there to say, hey, look, you got this bit right, this bit could do with improvement, how do we tweak this? So I think you've got to have the right level of industry engagement, and then the regs need to be right and the trust in there. But don't be afraid to change it. When it goes live, we're always pushing the boundaries and saying, hey, look, this isn't the best way, there's a better way. And sometimes then the regulation gets in the way. So I think it's be informed and then, be flexible once it's out there.
The great regulatory journey. Yeah, Ciaran.
Yeah, look, I think in embedded finance world, regulation is a really positive thing. It facilitates the ability to do things. I think the embedded finance providers then take that complexity and just expose it as very simple APIs. So the idea that having regulation stops businesses from doing things, I think perhaps maybe it's a bit lazy. In reality, great businesses engage with regulators, they deal with all of these things, they optimize, and then they make it extremely simple for the end customer, whether that's a platform or whatever type of business, to get the benefits from the regulation stability of the financial sector without necessarily having to do all of the hard graft themselves. So yes, I agree on the open banking side. Actually, I'm very pro-regulation on open banking. I think we could do more on KYC, the digital identity and other things. But fundamentally, the challenge for the embedded finance sector is to take all that complexity and hide it from our customers.
I was going to say big +1 on digital identity. Look at Sweden, where you have a digital bank ID. Why are we not doing it?
Hiding complexity from the customers. That's another button. Anyway, we've got about 2 minutes left. Do you have any thoughts about the right level of regulation?
No, I think aligned with the rest of the panel here, right? I think you need to start on why are we looking to do something, and I think regulation is helping, contributing to that. I think in some cases, regulation then helps on that, right? Pushes the industry to do better and et cetera, make the process even better for the customers, and I think that's ultimately the goal, right?
Well, this was a very hopeful panel. We're pro-embedded finance here at IFGS. So I wanted to thank all of you. Thank you very much for an interesting discussion.